Okay, so now we're going to start with problem 7.3b. And I'm still on page 339. And in this one, we're doing aging of accounts receivable and accounting for bad debts. We did the bad debt journal entries back in 7.2b, but this one actually looks at how we do the aging rather than in the previous problem that it gave us the amount. So in this one, we'll actually calculate the aging schedule. So in number one, it asks us to calculate the required balance in the allowance for doubtful accounts, and we look back up at the information that's given to us. And based on history, what they're telling us is that of the accounts receivable, the $396,400 that's not due yet, recent history shows us that 2% of that will not be collectible. 1 to 30 days, 4%. 31 to 60 days, 8.5%, and you get the idea. The older the accounts receivable is, the more likely that it's not going to be collected, which makes perfect sense. But they have calculated, they've given you these numbers. Companies will do this based on their past history. So we just multiply that across, and if we fill down here, because we used relative cell references, we'll be able to calculate that without having to change it all. And so the total, the auto sum, is $27,990. Now, as we saw in the previous problem, the current balance in our allowance account is given to us in the problem, and it's $3,400, and that's a debit balance. And so if I can do a T account over here for you, I might be able to show this to you a little bit easier. So if this is our allowance for doubtful accounts, and it normally has a credit balance, keep that in mind. So you have a normal credit balance over here, but right now this has $3,400 in it. And so what we want, our goal, is that the balance be this $27,990. So when we come down here and we calculate that, we want to have a credit balance of this amount. Okay. So what we have to do is a journal entry to have an ending balance of $27,990. And this is algebra. If that helps for you, you basically are going to say, what can I put here? So it's a credit balance less that will equal this. Now, a lot of you can do that in your head. I have to do it algebraically. But this one's pretty straightforward. I mean, basically, it's the $27,990 plus the $3,400. So we come over here and do a journal entry, and this is December 31st, bad debt expense, and then the credit is to our allowance account. Then if I put the sum of those two, it would be $31,390. So that is going to be our amount of our journal entry. And so, and in T accounts, just for good practice, show you that you do not put dollar signs. This is our ending balance, which again is what we want to match our aging right here. So that's the goal. So if this is 0, if that helps at all, 0, credit balance, and we have a debit balance of $3,400, which means we have to credit it $31,390 to get an ending balance of our goal. And that's all there is for, well, let's see, on the next page. Oh, that's analysis. You can do that on your own. And then the next problem is 7.4b, and this one has to do with bad debt adjustments. I think we have time to go ahead and do that one here. So we'll go ahead and look at problem 7.4b on this video. And in this one, we have a company that began operations on January 1 and completed several transactions involving credit, accounts receivable collections, and bad debts. They give you the summary below, and they ask you to do the journal entries for these transactions. So, first one says we sold $685,000 of merchandise that had a cost of $500,000 on credit, terms net 30, meaning there's no sales discount. So it's simply accounts receivable, $685,000, $350,000, sales, $685,000, $350,000. And that had a cost of goods sold, gave that amount to you of $500,000, and our inventory then decreased $500,000 because we sold that item. In the next one, we received $482,300 cash in payment of an accounts receivable, so that's just going to be simply cash received, $482,300. And then our accounts receivable will decrease because we received some of that was due us, $300. And obviously, if we knew which customer that was, we would have to write that off to their account or post that to their account. In C, we wrote off $9,350 of uncollectible accounts receivable. And remember, that's why we have the allowance account. So we write off the amount to the allowance for doubtful accounts, $9,350, and we decrease our accounts receivable because if we've written that off, we have to tell the readers of the financial statements we no longer think we can collect this money, so we can't show that as a collectible. It's misleading to the readers of our financial statements. Okay, in the next one, we have in adjusting the accounts on December 31st, the company estimated that 1% of accounts receivable will be uncollectible. And so we've got to figure out what our accounts receivable is, first of all. So we can come right over here and see that our beginning receivables was 0. That's given to us. Our credit sales were $685,350, which again is one of our transactions. Our collections were $482,300. Our write-offs were $9,350, which gives us an ending receivables. And we can sum that up, or you can do a calculation and enter it, whatever works for you. But it's $193,700. That would be our ending receivables, and our percent uncollectible is 1. And so our required ending, we take this number times our percentage, 1,937. We have an unadjusted balance, which was given to us, of 9,350, and that's a debit. It was given to us when we did the journal entry right here. This debit went into that account. And so to adjust the allowance, so in other words, we want an ending balance of 1,937. And right now we have a debit. So if we want to go back up here, it kind of looks like it did in this T account. So what we have to do is an adjustment, and in this case, we'll add the two together. If this was a credit balance, we would subtract, but because it's a debit balance, we have to add those together. And so we have our bad debt expense, and we have the increase to our allowance for doubtful accounts. Remember, the allowance has a credit balance. And we can just cell reference this so that we don't have to, if we had to recalculate, we would have the number available. Just good practice. So that's how we would do that for 7-4B for 2014. Now we move on into 2015. And basically it's the same thing. So I'm just going to go on down here to H and just kind of give you some check figures if you want to work through this and make sure you know how to do this. But in H, we have bad debt expense of 9773, and our allowance for doubtful accounts obviously has the same. But the way that that one is calculated is very similar. I'll go over here. This is 2014. Let's do 2015 over here. So our beginning balance was our ending for 2014. And then in the problem, they told us that we had an increase of $870,220. We had $990,800 paid. We wrote off $11,090, which gave us an ending balance. And I'll go ahead and just carry that over of $62,000. And I think I'm missing something somewhere because I'm looking at the numbers and I've got something different. So hold on, let me make sure I'm not misleading you in any way. 193,700. Beginning receivables. $193. Okay. And then our percent uncollectible is the same. So we'll go ahead and carry that over. Now, something interesting in Excel, sometimes it will increase that. This one didn't, so that's good. So 620. Our unadjusted balance is 9153. And so our journal entry would be for 9,773. So that's how that works in 7.4b. The last one we have is 7.5b. It's very similar to what we've already done. This one gets into notes receivable, and so I'll work on that one in another video and post that for you.